Good morning, hunters. Welcome back to the Daily Hunt for Multi-Baggers on this first day of 2026. What a year we're kicking off, huh?
Indeed, Ethan. We've certainly sifted through a mountain of data collected yesterday, December 31st, 2025. It was quite a busy end to the year, with a significant number of posts and discussions flagging a dozen different stocks that caught the community's eye.
And the overall sentiment is really interesting. We're seeing a lot of strong optimism for future growth, especially around some of these innovative tech players as users look ahead to 2026. People are eager for those big gains after a pretty wild 2025.
While that forward-looking sentiment is certainly palpable, my analysis shows a fair amount of underlying risk. High valuations, some challenging financial metrics, and insider activities suggest that while the community might be optimistic, a cautious approach is definitely warranted for many of these candidates. We're seeing a clear divide between speculative fervor and fundamental realities, as usual.
All right, let's jump right into it. First up, let's talk about Robinhood, ticker HOOD. Now, this one's been buzzing. We saw comments about almost 5x gains for users with strong confidence in its future. People are excited about its expansion into new markets like Canada and Europe, plus innovative offerings like prediction markets and stock tokenization. They truly believe Robinhood is printing money. We even had a buy rating for HOOD recently on December 19th.
Well, Ethan, while it's fantastic that some investors have seen gains, the KPIs tell a more complicated story, While the net profit margin is an impressive 52%, which does support the printing money idea, the price-to-earnings ratio is quite high at 48.13. This suggests the market has already baked in a lot of that future growth. But here's the kicker. The debt-to-equity ratio is a staggering 188.79. That's substantial leverage, which definitely raises a red flag for risk management. Also, one user was even planning to short HOOD as a hedge, and Needham trimmed its price target due to a sluggish crypto outlook.
But Brooke, the insider buying activity has been really robust, with over 76% net shares purchased by insiders in the last 6 months. That's a huge vote of confidence from those who know the company best.
It is, Ethan, and it's a strong counterpoint. However, the combination of that extremely high debt and a stretched valuation means there's little room for error. Any stumble and that high beta of 2.43 could really send it swinging. Given these significant financial risks for a new entry, our AI-generated insights classify HOOD as a stay away for now.
Okay, tough call. Next, we have Palantir, ticker PLTR. This one landed in the top 10 for 2026 in a community index, which means a lot of folks are bullish on its potential. There's a lot of talk about its Accenture partnership, strong growth, and being a top AI stock for the coming year. We even rated it a buy in October 2025.
And I see why people are excited, Ethan. But let's look at the numbers. PLTR has an incredibly high price-to-earnings ratio of over 413 and a price-to-book of 64. That is just astronomical. It means the market is pricing in an insane amount of future growth, leaving virtually no margin for error. While the revenue growth is strong at nearly 63%, it has to continually blow those expectations out of the water to justify these valuations. Plus, we've seen consistent stay-away ratings for PLTR throughout December from our analysis, and there's been net selling by insiders in the last 6 months.
But for a company at the forefront of AI and data intelligence, isn't some premium warranted?
A premium? Yes, but this is an extreme premium. The risk-reward balance is just skewed too far towards risk for new money at these levels. Our analysis, for several reasons, points to PLTR as a stay-away.
Moving on, let's talk about Reddit, ticker RDDT. The community voted it the number 6 stock for 2026, with some users calling it the easiest pick for the new year. It's showing very strong revenue growth at almost 68% and a healthy 18% net profit margin.
Ethan, the community enthusiasm is undeniable, but the valuation metrics are extremely high. We're looking at a price-to-earnings ratio of over 107 and a price-to-book of nearly 17. That tells me a substantial amount of its future success is already priced in. While the company has solid fundamentals, the stock is currently trading closer to its 52-week high, and we've also seen insider selling. Plus, recent news indicates RDDT has fallen more steeply than the broader market, which suggests it's vulnerable at these elevated levels. Historically, our AI has often flagged RDDT as a stay-away or speculative gamble. So for new money, RDDT is a stay-away. Up next, IRAN Limited, ticker IREN. This one made it to number 8 on the community's 2026 index. The buzz is all about their pivot from Bitcoin mining to AI and data center operations. There's even talk of a massive $9.7 billion deal with Microsoft and huge projected data center revenue for 2026. Some users see it as a top mover and a great opportunity since it's half off its high. They were even a buy back in mid-October. Ethan, that sounds incredibly promising on paper, and the community's optimism about that pivot is high. However, the current financial health of Iran is a major concern. The debt-to-equity ratio is extremely high at 33.57. Even more critically, the company has a negative operating margin and a very low net profit margin of under 1%. They're currently struggling to turn revenue into profit from their core operations. While projected future revenues from data centers could significantly improve these KPIs, those are still future expectations, not current realities. Goldman Sachs even initiated coverage with a neutral rating, citing high valuation. This stock has frequently been a stay away in our past analyses. Given the substantial financial risk and current unprofitability, Iran is a stay away. All right, let's talk space. Rocket Lab, ticker RKLB, was voted the number 2 stock for 2026. Users are talking about 11x gains, and some even believe it could surpass SpaceX someday. It's truly seen as an explosive space stock, with expectations for a breakout year in 2026. Our analysis even rated it a buy just before Christmas on December 22nd. Ethan, I love the ambition, and Rocket Labs certainly has a compelling vision. But as an investor focused on risk, the current financials raise some serious flags. The company is currently unprofitable, with negative net profit margins and negative EPS. We also see a very high price-to-book ratio of over 27, meaning its valuation is heavily based on future potential rather than current assets or earnings. But the biggest concern here is the insider activity. Over 6.1 million shares were sold by insiders in the last 6 months, significantly outweighing purchases. Plus, Cathie Wood, a prominent investor, recently offloaded her Rocket Lab shares. That's a strong signal from those with deep insights. So despite the community enthusiasm, RKLB is a stay away.
Next up, the absolute top pick for 2026 in the community index, AST SpaceMobile, ticker ASTS. People are saying it will outperform the other 9 combined and could be a $600 money machine. It's revolutionary tech with 1 billion potential customers, and they've even made satellite history recently. This is a true moonshot, the ultimate multibagger. Our AI has usually classified this as a speculative gamble in the past, but the community sentiment is off the charts.
Ethan, this is the epitome of speculative enthusiasm. While the technology is indeed groundbreaking and the market potential enormous, ASTS is currently a pre-revenue company. That means 0 net profit margin and negative EPS. Its market capitalization is already over $26 billion for a company not yet generating revenue, indicating that massive future success is entirely priced into the stock. Its beta is also very high at nearly 2.76, signaling extreme volatility. Any delay or setback in commercialization could lead to significant downside. We've also seen net insider selling. While the technology is exciting, for new general investors, the risk profile is extremely high. The AI continues to classify it as a stay away for general investment purposes due to the very high speculative nature.
And finally, Amazon, ticker AMZN. This tech giant still made it into the top 4 for 2026. Analysts are starting to see renewed growth potential heading into the new year, and some are expecting a wild Q4. Jim Cramer even thinks it's a buy after doing nothing all year. It's a fundamental powerhouse, and we've given it a buy rating quite a few times in 2025.
Well, Ethan, the community's frustration with AMZN's performance in 2025 was very clear, with many lamenting that it has done a lot of nothing the whole year, and some even sold off at a loss. While the PE of 32.65 isn't as extreme as some others, it's still a premium for a stock that many perceive as stagnant over the past year or even 5. The most concerning KPI here is the significant net selling by insiders, with nearly 20 million shares offloaded in the last 6 months. That's a strong indicator that those closest to the company might not see immediate substantial upside. Despite its top pick status for 2026, the past performance and insider activity indicate caution, so AMZN is a stay away.
All right, Brooke, quite the lineup today. Let's round things up for our listeners.
Absolutely. Based on our AI-generated insights and market commentary, here are our classifications for today's stocks. Investigate as buy, none. Investigate as cautious buy, none. Investigate as speculative gamble, AST SpaceMobile, ASTS.
And that wraps up today's Daily Hunt.
This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset. Thanks for tuning in, everyone. We'll be back tomorrow with more AI-generated market insights on the daily hunt for multibaggers. Happy New Year and happy hunting.